Cool. So I have GM from Dragonfly, Henrique from Hashkey, and Ed from Hashed. Actually, before we kick off, maybe it makes sense for me to share a little bit more about my background. I shared it this morning, how I started in VC and ended up at Aptos. What I didn't share was I wanted to be back in VC. I told Mo I would start for a few months, help Aptos get off the ground, and then go back into venture capital at a new fund. And little did I know, 1 month in, I was in love with Aptos, and I never left. And we're here 2.5 years later, and no offense, I'm not going back to VC. But I think we share a similar journey where we were all in venture capital at one point, and you have all in one way or another partnered or invested in Aptos. And we want to hear your story as to why and what you're seeing in the market today. So maybe when we let's kick off with GM, and let's hear a little bit about you, your story, Dragonfly, and then we'll take it and pass it on from there.
Sounds good. Thanks. Yeah, so my name is GM. I'm partner at Dragonfly. So Dragonfly, we're a global crypto fund, currently managing somewhere around $3 billion in AUM. And this is our third crypto venture fund, and we invest exclusively within crypto and Web3. And my background, currently I primarily focus on layer ones, layer twos, DeFi, and infrastructure. And prior to joining Dragonfly, I came from an engineering background where I previously was an engineer at Chainlink, building Chainlink's Fair Sequencing service, which is basically Chainlink's MEV product offering. And then my first foray into crypto was back in 2018, was building a high-performance EVM layer one. So my journey into Aptos was really this like kind of obsession, almost like as an engineer for like high-performance environments and high-performance chains to build applications on.
Hi everyone, my name is Henry. I work for Hashkey Capital. Joined the team around 2.5 years ago, and I spend most of my time either doing research or doing the investment side, mostly focused on DeFi. And I wrote some reports recently talking about LSTFi, and also a new report coming out next week about DePIN RWA intersection. And I'm also super interested in the Aptos ecosystem. Really looking forward for our conversation today.
Hey everybody, my name's Edward from Hashed. I know there are a couple Hashkey. I'm Singaporean in a Korean team. Was the first hire in Singapore. Grew out the team, built out the Hash brand in Southeast Asia, and now we have a team of about 4 people, including an office in Singapore. Some background on Hash: we started in 2016. It's all prop capital up till today, although we did raise 2 different funds for different mandates. We are industry agnostic, we're also geography agnostic. We have presence in Korea, in US, in Singapore, and also a very big team now in India, about 20 people. So very happy to be alongside some of the biggest industry folks in today.
Cool. Thanks, guys. So earlier this morning, or over the weekend, I shared a script with all of you about what we wanted to talk about on the panel. We're not going to use that script. I want to start with, what is your most non-consensus thesis right now in DeFi? Ed, I'll start with you.
Non-consensus thesis. So I think, I guess a lot of people today are building out a lot of perp dexes, including some of the folks over here. I think it's one of those that people jump straight into it, mainly for the reason that it's one of the most profitable products out in the market. All you need is trading volume. You take a cut of fees, and that's why you see so many GMX folks out in the market. I think one of the things that is probably, when you say non-consensus, probably you mean contrarian, is that there probably isn't enough space or a market share for 1,000, maybe not even 1,000, but like 50 players to exist. And what you eventually start to see is that the perp dex space probably consolidates to 1 or 2 or even 3 in the market. I think that said, each chain might be able to coexist each chain might be able to have a leading player on their chain. So if you look at Arbitrum, it started off with GMX. When GMX tried to build out on other chains, it didn't really work. So, I think that if you're in the space of building a perpdex, what you probably want to achieve, first of all, is to fix and pick a chain that you're very comfortable with, that you have a very strong community that you build out, and also strong support from the foundation. You cannot just go out there and say, okay, let me try to build a GMX fork, and then hope to get a fair amount of fees from trading volume. I don't know if that answers the question or like being not like contrarian, but at least it gives you a step towards thinking, okay, if I'm trying to build a profitable protocol or something that's hot in the market today, how should I go about approaching it? Yeah, and I can tackle more about it later on.
That's helpful. I guess Henrique or GM, do you guys disagree with that?
Yeah, I think I agree with Edward in the sense of that now at the moment we see big narratives and big trends, right? We see from DEXs, and there are tons of DEXs that will probably not succeed and the market will consolidate. But then we also see other narratives that people are going crazy about, right? So you have AI and meme coins and probably narratives like DeepIn. And probably in the long term, like what's going to happen is that narratives that are kind of more getting less attention from people are actually have the biggest upside, right? So probably instead of looking at the big trends and AI and DeepIn and RWA and some of these DeFi sectors that everyone is focusing on, so probably we should be focusing on other sectors that have been having less attention, or infrastructure, or maybe you could even go back and, during the bear market, what were the sectors that were people paying attention during the bear market? And maybe we should be doing the same now.
Very contrarian take at a DeFi conference. Thank you. GM, what about you? What's non-consensus that you're looking at right now?
I mean, my non-consensus view, if I'm not still like unclear whether that's really a non-consensus, but like within DeFi, I don't think under collateralized lending is going to work. And the reason is obviously there's a lot of people really excited about this idea that right now, if you were to do borrowing and lending on chain, all you need, like the only possible way to do that in smart contracts is over collateralized lending, right? Obviously, that people criticize that for capital efficiency reasons. The reason I don't think under collateralized lending is going to work is because you either have to rely on bringing some off-chain credit score on chain or just some off-chain agreements, right? In that world, then I don't see how you as a DeFi protocol is actually able to compete against the traditional players. What like blockchain and on-chain protocols are so good at is actually the over-collateralized part, right? So I would tend to think it's much better to just bring more collateral and like more assets on chain, and then fully leverage the fact that we have the best system to do trustless and over collateralized lending, which is on a blockchain. So it's hard to tell whether that's non-consensus or not, but that's kind of my view.
GM, maybe I'll just ask you a question follow up there, because I spoke to some protocols that were considering to build uncollateralized lending. I semi-agreed. But I hear what you're saying. So their point of view is that obviously it unlocks capital efficiency. And the way they go about doing that is actually to bracket your borrowed funds into certain use cases. So it's sort of like purpose bound. How do you think about, I'm putting down 20% of my collateral and I'm borrowing at 4 to 5x, or maybe even smaller, like 2 to 3x, but the amount that I borrowed can only be used in certain protocols. Like let's say I take out a loan from Echelon. I'm able to take it under collateralized. I borrow at 2 to 3x, and I'm only able to use it on Merkle trade. How do you think about that?
I think my gut reaction is kind of defeats the purpose of when I want to like really take out a loan. Right? It's just like I want to take out a loan to just like do all sorts of things, do like multi-hop things like in DeFi. Right? I think that's probably, at least for me, what the reason I would, let's say, back in, initially take out a loan on MakerDAO, on Aave, on Compound, all of these borrowing lending protocols for. But yeah, I could imagine some use cases that could use that. But yeah.
All right, so if you want Dragonfly's funding, don't do that.
Ed is now the moderator of this panel.
No, Neil, you said we're going off script, so.
Please keep it going.
Yeah, just one thing regarding the under-collateralized lending. I think I agree with GM, but I think we might see a new emergence of under-collateralized lending now that we have the deep in tokenization of some real-world assets. So there are some deep in projects that are tokenizing, for example, a fleet of Tesla that you can rent. This is a project called eLoop. And basically, it's basically a DAO that owns a fleet of 100 Teslas in Amsterdam, I think. I can double check. But basically, when you start tokenizing businesses or a fleet of cars or solar panel and things like that, maybe you have assets that you can use for under-collateralized lending in a more transparent manner without the need of all those credit ratings and all this stuff, because you simply see the cash flow on-chain and all that stuff.
But in that case, that's like when you bring the asset on chain, then why not just do like over collateralization in the sense like you already have a pricing mechanism, like let's say whatever asset, like if there's a good pricing mechanism, then what you're talking about is actually over collateralized lending, right? It's like what the smart contracts are so good for is okay, you hit a LTV ratio of like 80%. I'm going to take your collateral. And as long as that collateral is liquid enough in the market, I could either redeem that, let's say directly with the issuer, or sell that to someone else. Right? That keeps the system healthy and functioning.
I don't know. You could perhaps have like a lending protocol that lends to businesses that are tokenized, or like real-world assets that are tokenized. I don't know. Yeah. Still, there is no such thing yet, so yeah.
This is exactly what I was looking for. The debate is exactly what we're here for. I think just to switch gears here, there are a bunch of projects looking for funding. Many of their rounds are oversubscribed, will be oversubscribed. Why should they take your money? Ed.
So I'm supposed to shill my company, right?
Pitch your fund.
Yeah. So the proper shill or the fake shill? Anyway, I think, Hash has been around since 2016, and we're the largest fund in South Korea. So I think if you value the Korean market, whether you're a DeFi product, or gaming product, or a social product, I would think that the Korean market is something that you definitely want to capture. If we look at some stats, Upbit, which is the #1 spot exchange in Korea, they do second probably to Binance in terms of spot volumes. There are no futures or perpetuals that are available for trading in Korea. So if you do want to capture that kind of degeneracy in Korea, I think we can help you with that go-to-market approach. We studied that a little bit too much to understand what works for a Korea market and what may not. If you want, let's say, an influencer, KOL influencer strategy, to the top 10 that hits the market, we have connections to them as well. But more than that, Hash is not really just a venture company. We started off as venture, bread and butter. So the founders actually put their company money that they exited from their Web2 startups. They rotated that into buying ETH off the secondary market, rotated that into ICOs, and then venture capital. Over the past few years, though, we have now built out 4 different subsidiaries. We have a 150-man team that does incubation. The incubated companies are mostly in the gaming field, entertainment field. We have a research arm that works with governments on policy framing in US, in Korea, and in India. So the head of that research arm is actually the deputy finance minister in the Korea SEC. So ex-deputy finance minister. And then, so on top of that, we also have a full-blown team now in India, 20 people. They're all based in Bangalore, including an office that covers research, marketing, community building, venture, and also some level of liquid. Yeah, and lastly, we have a quant arm, and that's something that we started about 2 years ago. Some of the things that we are trying to build there is on-chain strategies. So whether it's maker-taker volume, whether it's just building out your liquidity, whether it's farming, trying to grow and help your LPs, if you're a DEX or if you're a perp DEX, or even a lending market. We also do some consulting and advisory. So as a portfolio company of Hash, you literally get the resources to all of these subsidiaries.
Just to jump in, I can definitely attest to, as a Hash portfolio company, them opening doors to the degeneracy of Korea and the retail traders where one APT equals one apartment meme. So, +1 for Hash.
Okay, from Hashkey Capital side, I'll say that the first advantage is that we share a lot of deal flow with Hashed, and we do a lot of co-investments with them.
+1 to Hashkey.
But we not only bring investments, but we also bring a lot of engineering support, legal support. We do a lot of introductions. So far, we have invested in 300 different projects. So we really try to build actively a lot of ecosystem. And we have a full team of post-investment. We have a post-investment team that basically their job is every day they are meeting with all our portfolio companies and understanding what are their needs. Do they need do they need a loan? Do they need help listing on exchanges? Do they need engineering support? So I think our advantage will be this active support that we provide to our portfolio companies, and also opening doors to the Chinese market and Asian market. So Hashkey, we are mostly based in Hong Kong and Singapore, and we have mostly the Asian markets, including some of the, if I can say, degen Asian markets also. Yeah.
Neil, you've been putting us on the hot seat. I'm going to throw it at you first. So why should people take Aptos Labs money in terms of investment?
Fair question. So our philosophy is a little bit different from you guys. And I think before I go into my answer, I think these guys have a great representation of what our cap table and beyond looks like, our investor base, supporting our entire ecosystem across the stack, as small as a $1 million round all the way up to tens of millions of dollars. And so I think these guys are awesome, and you should definitely come bother them after this panel. But from our perspective, we're not here to lead rounds. We're not here to take sizable checks or big chunks of the cap table. We can write very small checks and provide as much value as some of these guys on the panel with me, and maybe a little bit more, whether it's our 93-person engineering team in Palo Alto, or it's Mo and Avery themselves sitting down on a one-on-one session with you, going through your roadmap, trying to understand what you're building, what your goals are, and how to achieve them in a reasonable time frame. And so from Mo and Avery all the way down to everybody on the 150-person team at Aptos, our goal is to support the Aptos ecosystem because your success is our success. And so you won't have a more aligned investor than us, other than maybe some of these guys on the stage with me. How is that, GM?
That's amazing. That's amazing. I'll answer this. Why should you, let's say, take any VC's money? I think the true answer is you shouldn't if you don't want to. And let's say if you're building the bonk of Aptos, right, like the meme coin, you should, and not in any case should you consider taking VC money. It's because it's just not true to what you actually want to build.
Would you consider KOLs or angel investors as part of that VC group, or is that separate?
I would say these days the best angels they actually could in some sense already rival a lot of the VC funds in terms of value add that they can actually provide. all while taking a very small amount of the cap table. So I would strongly encourage folks to think about who are the angels that really understands your vision. And yeah, like if it's, let's just say 5 to 10 angels that really gets your story, you can totally do that. And these days, these angels can write up to 200K, 500K personal checks for the really established angels out there. So, but though if you need $10 million checks, $20 million checks, Dragonfly is probably the only place that you can find that. So that's why.
Awesome. Thanks, guys. So final question to wrap up. What advice do you have for founders out in the audience right now that are currently raising?
I think if I were to give like I'll try to give a like quantifiable piece of advice. One thing that you really want to make sure of as you raise, how much, and it's related to what GM has shared, is how much equity or token supply you're giving up for what you need. You need to make sure you have the numbers right, such that when, I'm assuming everyone here is involved in the token side of things. So when you launch your token, it cannot be too predatory to the community. And a very general rule of thumb is you do not want to cross 50% of supply to insiders. And when I say insiders, it's in the range of like, it includes investors, team, advisors, including market makers, which is required for, you got to give X amount of supply to market makers and to centralized exchanges when you reach. If you can keep it below 40%, that's ideal. Anything beyond 50% becomes really too, kind of mercenary, because when the unlocks do happen and you do not have sufficient liquidity, the circulating supply does double or triple, and that scares retail a lot. Unless, of course, you can manage that along the way with, let's say, protocol upgrades, significant announcements, just like what DYDX did. And I think that's a very good example, because back when they crafted the tokenomics in 2020, it wasn't done like idealistically. So what they had in December 2023 was an unlock of about 2x their circulating supply. That's close to in the range of like 1.5 billion hitting the market at the current prices. How they manage that is with a very sufficient and efficient way of building out their app chain, which is DYDX V4 on Cosmos. So if you can, you don't really have to go through those problems if you plan out your fundraising status efficiently. So something in the range of, let's say, your pre-seed, you really only need, let's say, $1 million to build out your team, grow your team to about 5 people for about 12 months. You may not even want to give up anything more than 10%, or you want to keep it below that actually. And then slowly as you build out and you have different milestones, you can actually give up much less of your supply based on a higher valuation in the market. Yeah, I mean, the list can go on, but I would like to say that's probably one of the things that's most important and that founders tend not to calculate enough time for.
Yeah, I agree with you both. Like, first, if you don't really need to fundraise, don't fundraise, or go to angel investors or angel syndicates or KOLs that can provide perhaps a more active support and even do some sweat equity. But if you need to fundraise, I think my advice would be maybe start 6 months before you actually need the money, and plan during the bull market, plan to fundraise approximately 12 months of runway. Don't give too much equity or tokens. If we are in the bear market, perhaps you'll need to fundraise 18 to 24 months runaway, and maybe start pitching smaller investors, from starting family and friends, and then angel investors, and then syndicates, and then tier 2 VCs, and then tier 1 VCs. Sometimes happens a lot, right? Projects that are super interesting, but the team is not very prepared yet, and approach a big VC like Dragonfly, and maybe they are still very early in their pitching, and
we can write early stage checks as well, by the way.
but maybe they are still very green in terms of pitching, right? And it might not be the ideal phase yet. Maybe if they wait 1 month and then mature their pitch, probably they increase the likelihood of success. And then finally, I think like all the founders, we all have like a certain ego, and we don't like to hear a no. But many times these no's is more like not now, right? It can convert into a yes in a few months after. So always keep even the VCs that didn't invest, keep them part of your your newsletter, and keep them updated on your progress, because it might turn into a yes in a few months after.
I think, can I just add something? And it's related to what GM said earlier also about choosing your cap table wisely. There are instances, so we do early stage checks, but we also go up to like pre-TGE, pre-IPO stage, up to 10 mil. And there are instances where we really did steer away from the later stage rounds because the early stage cap tables were really too messy. You end up taking capital for the sake of taking capital. I know not everybody will be in a position to choose, but if you are in the position to choose, I would advise being very careful with who you choose on your cap table. That means you take, let's say it's a pre-seed or seed round, and you're taking a mil, right? It's much better to take 2 companies that give you 500K checks versus 10 people that give you 100K checks. The reason being the cap table gets very messy, and you end up, the later stage investors, like when you pitch to, let's say, Dragonfly or us at some point in time, we may be very wary of like, oh, who are these guys, right? We're not sure what kind of dumping pressure they have on the token when it goes live. And we much rather be in a position where we have not just a larger percentage supply than them, but we have a decent control over what happens to your product at a later stage when you go live.
Yeah, inside scoop, what he's trying to say is do reference checks. And so I think the reason why they're all on this stage is because we view them very favorably, and we are giving our reference very publicly. But even more so, Hash invested in Merkle. Merkle's somewhere here. Dragonfly invested in Iconia. They're right here in the second row. Feel free to ask your other fellow founders and lean on each other to see who is the right fit for your cap table. But GM, sorry, I think you were next up.
Oh, yeah, I would say like right now, obviously the market is really heating up, and I'm starting to see a lot of just very hand-wavy thinking when it comes to fundraising, and people see, oh, someone's raising at 100 mil equity, 200 mil FTV. I'm gonna do that too, right? But I think the right thing is to think about like why are they doing that, and like what does that imply, right? So the first thing probably that's worth asking is, why should I consider, let's say, using tokens as a fundraising mechanism in the first place, right? Like you could perfectly just raise purely on equity as well, right? The fact that you're raising a token is probably means that it represents some sort of a network that you're building, right? That's what tokens are uniquely good at. Now, why like people do, let's say, 1-to-2 or 2-to-1 equity to FTV, it's because you need to say, when people are building, let's say, a layer 1 network, that's because you need token distribution to be distributed to outsiders, not just only the insiders of the company. But you might not be building a layer 1, such as all of the layer 1s that's on the market, right? So
Aptos.
Yeah, exactly. So so like you need to think about like, am I building an equity business, or am I accruing value to the token, right? And then that should guide your thinking around then what am I actually raising for, right? And then comes all the question of, hey, which partner do I want to pick? What's the sector am I building in, and etc.
Cool. Thank you guys so much for being on this panel with me. Where can people find you? Other than right in front of the stage in 30 seconds, they find you as Nemo on Twitter.
It's a CPT, N3MOX. Yeah. Actually, some background. I was hired by my team from Twitter as well. So I used to write a lot more 3 years ago. I used to write threads, shit posts even. And they realized, hey, this guy can add some value with the shit posting. So they brought me on board. But jokes aside, I do cover research for my team and investments as well. So yeah.
How do people find you guys?
I think you can just Google search my name, Twitter, LinkedIn. I always answer, yeah.
Email is probably the easiest. It's just gm@dragonfly.xyz.
What an email. What
so
a
just
name.
say GM, and I'll definitely reply.